All right, good morning. Good morning. It's going to be a very unusual day. It needs you guys to be very, very cautious. There is an additional behind closed doors meeting today at the Fed. Whether or not they're going to come out with a statement is unclear yet. They're not planning on any presser so far. So, they could meet and then they could just go away and not give us any news from the meeting. But the fact that they are having an emergency meeting today kind of implies they're looking to do something between now and March. Right, so that's at 11:30. We don't know how long the meeting is supposed to be, and we don't know if there's going to be any announcement afterwards. So just to be very careful when we try to game out what's likely to come from the meeting. They could begin the taper process, or they could do an emergency bump in the rate hike rather than doing that shock and all on the 50. There's been talk that maybe they'll do 25 points now and then another 25 in March. One of the biggest complaints that we've seen is that people are kind of getting on the Fed saying, you are telling us that there's all of this inflation. We can see it. We can feel it. It's all over the place. Why are you still buying? Right. So maybe just curbing their asset purchases a little bit would kind of make sense, right? Like they're still buying right now. That literally makes no sense. They know that they're uh, in a runaway inflation situation and that they're talking about a shock and awe event in March of a 50-point hike to kind of curb some of this down. What the heck are they still buying for? So it could be just nothing more than the fact that they're perhaps going to begin the taper sooner. So as we usually do, we want to look at what economic events are on the table for today. I like to use FX Street. It's got this additional little perspective on the dollar. Um, Esther, one of the Kansas City Fed officials, she was talking over the weekend. That kind of hit the news a little bit. So a while back, it was Bullard, maybe a little too flippant and flamboyant in his talk. And then there was Esther yesterday, and she was maybe too reserved and didn't perhaps spread the message as well as they would have liked. We do have Bullard expected to talk today as well. And the European Central Bank president, Christine Lagarde, is talking today. So don't get caught sideways on this, right? You can see anticipated impact when Lagarde is supposed to be talking. It's high. All right, bring it into Market Watch. If yours looks like this and it's just really full of junk, turn them all off and then just turn on the Econo Day event. We do have additional auctions today at 11:30. Don't sleep on these. I know they sound boring. They may seem like something that doesn't matter to you because you probably never see anything on the news about them. They're really important. Uh, there's so many times that we've seen the market just completely change its entire bias for the day. Not just one market, but all four of the stock indexes suddenly just break out of a range and start running as these auctions come through, or having a really great day and watch that great day just turn into a compressed range that does nothing for the rest of the day, starting right at 11:30. All right, so same thing today. It's the only one that we really have to worry about other than these Fed speakers. They're going to be talking out there. So you're going to have to hit that with the news. And then there's the emergency meeting at 11:30. For that news, although, it gets to be a bit much because it's like a running tally of news. One way that you could do that is to go to something like Finance Juice. I'm going to show you this Finance Juice. I am signed in, but I have the free version, right? I didn't go and buy like an upgraded version. And you can go in and adjust this thing so it's not perhaps showing you things that you don't care about, right? Kind of weed it down a little bit. When it's something that they deem important, they will make it really bright red. You're not going to sleep on it. It's going to be right there in your face, right? So maybe as they're talking today, if they say something that the market deems relevant and starts to move, it will show up in here and it will be bright red. It'd be easy to see, and then just kind of keep that off to the side until we know that they're done chipping their teeth and get it out of their system. Yeah. Yeah. You like it. So that's 11:30 for the Fed meeting. We are down below a critical level. We broke below the daily 200 moving average. And think about that for a moment. The S&P daily 200 moving average, and we are back inside of this very violent box. This box that is here matches the high of this candle and the low of this candle. Right? This is the controlling candle, and that's the range that we stayed in, that we defined a lot of our structure around. We're back inside of that box. Right now, we're going to be looking at these lows for the week around 42.7, 4,300. If we break below 42, it's game on to the downside. We are presenting in a failed flag, but it has not failed yet. So until it fails, it's just a flag. And as with all the other flags, you can measure the impulse, copy that measurement, set it to the highest point of the pullback, and that will plot your next leg down. At the moment, that puts us above 4,300. There's a lot of concern that if we do break below the Globex low of the current low, we're going to have to contend with volatility. This is the VIX futures from March to October. We are in a very, very serious, very steep backwardation here. Want to keep our eye on this. These front month perhaps can be a little bit misleading. If you come into the options tab, turn on the VX futures, set it to show all so that you can see which days you're looking at. Right? They're looking at Feb 22 here, pricing in 29.20. That's only 2 days out. So, bring it out a little bit more. Give it at least the 20 days, right? That 16 day stands out, 28.10. Below that, we get into 27.80 and then 26.90. All right, so there's your backwardation levels with your dates on them. It's really important to understand that because when you go to look at the VIX, the VIX, this is a derived thing, right? They're looking at the pace and scope and speed of trades that are done in the SPX options, and they use that with a really crazy formula that I'm not going to try to explain, and that's where they derive volatility from. Okay, but the other side of that is from the VIX futures. So if you're going to go into the VIX thinking you want to hedge and you're looking at 64 days out, these options do not go to the VIX chart. They don't go to these candles and the VIX. These options, these go to the VIX futures. So at the money isn't at the money. You got to look at the 64-day VIX options and then go to the 64-day VIX futures and find out where at the money is. Otherwise, at the money isn't at the money at all. So it goes 64 days out, 26.90. That's at the money. This is one of the reasons that you can't wait until the house is on fire to get insurance, and you can't wait until the market's already having a serious disruption to the downside before you start buying some volatility. Nice little spike there in the S&P. So why bring up the VIX levels? It's really important when we drop below a certain level, the machines are going to start to respond completely different. We've also got a very crazy skew going on right now. Put call parity, the cost of puts versus the cost of calls, and the skew differential between them. You actually get a little bit of a trade set up with that kind of logic, right? That if the put call parity is that out of whack, you could put on a put spread and you could put on a call spread at the same time and give yourself a very level field in the middle that would pay you, anywhere from 50 to 75 cents. And I know that may not sound like much, but consider if you're just running an arbitrage play and you got no skin in the hunt either way, I don't want to say it's free money, but it sure feels like free money. Something to think about. All right. Done nerding out on you guys. Let's get back to where we were at. So that little push that we just got brought us back above the 4,400, but that's not enough. It's not enough because as you can see, there's a very large level of resistance right above us. We'll have to get back above the cog line at 44.11. And on the other side of that, we get into this shallow area. Now, it's anticipated that we move through shallow areas very quickly because there's no volume nodes there. So one way to look at it is if we can get through the Globex high, the current Globex high, then it's very likely that we'll be able to touch the Globex low from Friday. We should move through that area relatively quickly if we can get back above that Globex high. There's a lot of geopolitical stuff going on right now. When I was checking the news this morning, a lot of it was focused on the Ukraine, oil. While we often talk about how we don't want to listen to things like CNBC and places like that, where they're just chipping their teeth and they're usually on the wrong side of everything, we do want to keep track of uh, their perspective on any new information that's coming from the Hill, anything that's coming out of the White House, right? Because we're not going to see that kind of stuff in the charts. We need some kind of input from what's going on over there. Any new statements? And one thing that I've seen in the overnight hours is that this weakness that came in, besides the 2 a.m. drop, since that was just a part of the kill zone, other than that, that weakness in the market was based almost exclusively on what's going on over in the Ukraine. So we had Dally out there and Esther from Kansas City, both trying to calm the market down. Uh, Friday, there was a post that came out saying the market started to price in 100 points between now and June or July, starting with a shock and awe 50-point hit in March. And that's really what flipped everything back around. So if they can calm down that expectation a little bit and sell this narrative about reducing the asset purchases and clearing the sheet off a little bit to bring the back end up on the curve, or at least take some pressure off of the curve. If they can sell that narrative, we could see the markets begin to calm down a little bit. Just keep your eye on something like Finance Juice or that Discord that I built that monitors Twitter and all of those different Twitter accounts. It's got Live Squawk, Bloomberg, Investors Business Daily, Breaking Live, Finance Juice. And that way you're not just watching one source. You're basically watching the best sources on Twitter without having to go to Twitter. I hate Twitter. Get this trade closed before that market starts to push back against me. Okay. Got to get it while the getting's good. All right. So, should the market not like this downside move, really contemplate what that's going to look like. Now, I've had someone asking about those puts that we've been selling in the MES. One question that really kind of bothered me was, hey, how come you're not doing more of these? Um, we see this from retail traders all the time. They learn a new thing and they think, it's the greatest thing since the wheel was invented, and then they want to shove a lot of money into the trade. Yeah, I hate Twitter. I hate Twitter. That's why I built that Discord so I don't have to go to Twitter. When you take this put trade that we've been using, and it has a lot of juice right now because the volatility is high and it pays really nice and it seems really distant and really easy and it's great. There's a reason we don't size up and put on 8, 10, 12, 15 of these things. You put on one, you give it a week or another week, and then you add another one, and then you add another one a week or two later, and you layer them in one at a time, right? Because if we put one on last week and we were sitting in this range here, and then say the market goes down to around 43, 4,200, and sometime during the week we put another one on, and that happens to be around 39, right? Or maybe we even get a better price and we put one around 38. You're layering them in, keeping your distance with the market, right? And every single one of these are going to get challenged if we take a drastic extreme move to the downside. Plus, if you're already carrying a lot of other longs, all of those long trades are going to fall if this market breaks 4,200 and starts to go down, right? There won't be a safe haven. You won't be able to go to gold or silver. You won't be able to go to real estate or utilities. We break 4,200 and start going to the downside. The only thing you're going to be able to run is something like a convexity spread or volatility spreads, right? Getting into the VIX. So there really isn't going to be any safe place to go. Every single thing that's out there that you're holding that's long is going to lose. So these puts that we've been selling in the MES, they're just a nice way to make a couple $100 every week or so without having to put a lot of effort into it. But you don't want to size up and go crazy, right? The market has this uncanny ability to wait for you to size up really big and then kick you in the face. So ease into these things a little bit at a time and don't just bet the farm on these out of the money trades, right? There's a lot of risk here, especially in the current market conditions. 4,000 can be reached, right? We're not like outside the distance that the market could move. Why do we say that? Well, every single product out there has a measured move to it. We know how far the market could move in a month, in a week, in a day, heck, even in the next hour or in the next 10 minutes. Everything has a measured move to it. It's a square root of time, right? You run that formula with the square root of time, and you can map out your expected move in any pricing model. Options pricing uses a binomial system. You just kind of imagine how that plays out, right? That's literally where its pricing comes from, right? So come out to the higher time frame and really look around and think about, we start breaking to the downside and we've got an ADR of 2%. Well, we're flat on the day. So put a 2% move on this thing. And the 2% move, that would be a normal move. That would put us right around 4,300, and it wouldn't even be considered extreme. We could go to 4,300 today and the market would yawn. It wouldn't even be surprising. So if a 2% move is normal, what's an unusual size move today? Well, put another 2% on there. That brings us to the bottom of the box. That brings us to 4,200. Another way to look at it is how far away is the weekly expected move. The weekly expected move is 43.25. That's how far we're expected to move for the entire week. Before that little bump that came in at 735 or so, we were threatening these lows. Check to make sure that there's no market maker move. Keep your eye on that through the day because that's where it's going to show up. If there is a market maker move, that's where it'll appear. And recognize what we have here. The 2 to 4 zone is the kill zone. When we make a drop like that, we very, very often reciprocate back up to where we were before the drop. If you do any research on the kill zone, it's from 2 to 4. And if you'll notice, when you go back and do that research, how many times we make a sharp, steep, sudden move at 2 a.m. or to begin the move into the kill zone. And then before the market opens, we unwind or redo that move back the other direction. It could go up or down. Statistically speaking, the biggest moves in the market happen during that 2 to 4 time zone. All right, for the Nasdaq, we have the same thing, this little micro cup with a handle. We've got to worry about the volatility, and we've got this serious level of resistance overhead. Right? We got to get through this level. And once we do, we're very likely going to move through the next zone very quickly because it's shallow, right? There's nothing really resisting us at that level. Notice if we happen to break back down below this price shelf here, call it Friday's regular trading hours low. We break back down below that, we're very likely going to move through that zone very quickly as well, right? We did it earlier. See how fast we moved down through the kill zone and then how quickly we moved it back up through the kill zone. It's a very shallow area, not a lot of resistance there. The Nasdaq has a different critical level than the ES. It's 1400 or 14,000. That's the line in the sand there. We get below that and the market's going to start to get really, really nasty. So we do have the previous lows from all of that trash back here. But it's the psychological level of 14 that we got to really focus on. Should we break below that, then it's going to be the low that we're focused on. And then beyond that, that's when things are just really going to start to get out of control. That's got to go. Now the Nasdaq right now is basically flat. We've got an ADR in here of 3. Let's check to make sure that ADR is accurate. Yeah, 3.4%. The ADR is calculated over the last 21 days, so basically a market month. In the last month, our average daily movement has been 3.4%. It's been that extreme. And we're basically flat. So we've got the opportunity or availability to make a 3-point move today, 3% move today. And it wouldn't even be considered an outsized move. It'd be normal. We've already burned off 12 hours of the day, but that still doesn't say that we can't hit that anyways. Check to make sure that there's no market maker move. Right? We go into all products. We look, if it has a market maker move, it'll be right there. There isn't one right now. That doesn't mean that there won't be one. When we had that move come in at 735, look at what moved with it. The dollar and the VIX kind of correlated, both moving in the same direction, both reacting to that move the same way. And the bonds moving completely opposite, which is good. The bonds have been coupled with the indexes a number of times last week, and we've seen, the S&P and the bonds going up at the same time, and the S&P and the bonds going down at the same time. And what we usually say is it's not supposed to do that. But like I've mentioned before, Tasty Trades did an amazing amount of research on this and how there's been times throughout history where stocks and bonds are moving in the same direction at the same time. Right. And this is one of the concerns right now with those 60-40 portfolios and how they're supposed to diversify and offer opportunity when instead they're actually compounding your risk right now. In that move that we just saw, it was across the board. It was in all 4 of the indexes. So we're not bifurcated this morning. We got a tightly correlated index. And this can be a little bit of a concern to the upside and the downside, right? When the markets sink, they tend to make bigger moves than if they were bifurcated. So everything hinges on 11:30 today. The additional auctions, the emergency meeting, the pressers by the Fed, um, the ECB, Lagarde talking, which is very likely what bumped this morning. I don't know because I was streaming when that bump happened. We was doing a little bit of research over the weekend, looking at opportunities that we could want to get into since we're kind of dealing with a market where basically everything is getting whacked, right? So we were kind of asking a question, what should we be focused on? Well, energy's been doing really good, right? And you come in and you look at the relative strength, the 5-day, 10-day, 21-day, 42-day. And if you looked at what the change percent on the week was, it really just all goes back to metals and mining, and energy. So we got some really good names to play out in energy. What we ended up doing from there is running a scan, creating a watch list of all of the energy names that have weekly options. That's this list here. And then running that list through IBD to get their fundamentals and sort them in order by their fundamentals. Now, I posted that in the large caps chat. All you have to do is just scroll back through the chat in the large caps chat room, and you'll see the list of IBD with all of these names ranked by their fundamentals. We've been using the Alpha Protocol list, which is the list of 47 names. Those are the most liquid options out there for like short duration trades and day trades. This is just weekly options. Well, just because they have weekly options doesn't necessarily mean that they're liquid enough for day trades, right? But this would be shorter swing trades, say, less than a month, or due to some of the names in here, like Rig, perhaps a little bit of a longer swing trade where we can do something like the Jade Lizard setup, uh, the wheel, covered calls, covered puts. So, maybe some longer duration swing trades. It's something to focus on, right? All right, we got the S&P 500. We want to knock it down pre-market change percent, use the filter, get rid of the 500 names, kind of bring it down to about 100 names, which is not really easy to do. 91's close enough. We need to adjust the color scheme since it stays gray until we get to a 0.5%. So we do that right here. You can see we're in a risk off environment. There are a few names that are slightly up. You want to follow them through their sectors. You can see the chip sector is doing really good this morning, right? A lot of these chip names down here, a few of them anyways. Set this one to the Nasdaq 100. Change this one to pre-market change percent. We don't need a filter. We're already at 100 names. We just want to adjust the color scheme. Again, it kind of helps break things down, make it easier to see what's moving around this morning. Communication names. Now, this is really where it starts to pick up. This is where we get to go in and ask, well, how many names are moving this morning in the pre-market? And by how much? Right, so how many names are up in the S&P at least 1%? None. In the Nasdaq, 2. One of them happens to be one of the chip names. 1% is a bit aggressive, but when you take it in the other direction, how many are down at least 1% this morning in the Nasdaq? 13. So 13% of the Nasdaq this morning is down more than 1%. When we're looking at these names, it's not one single name that we really want to look at, right? It's looking at the names that are on this list and thinking about what do they represent as a group, as a sector, as an industry. What are their peers doing? Is there an opportunity for me to trade on one of these names? Could I use these names and then perhaps run it down a little deeper? Now, with that bump that we had this morning, we're looking at a lot of names that are now going to be presenting something like a red to green setup. So really great daily chart setup that we use to intraday trade. So that's what I would be focused on. How many names are up, which names though they are, what sector they belong to, and then look for a daily chart setup. IX10, red to green, trendline breakover, inside day, to narrow that list down. Because if you think about it as a big funnel, right? Say you got 100 names at the top of the funnel, and you're trying to get it down to 2 or 3, maybe 4 names at the bottom of the funnel. If this does turn into a trend day, this is where we're going to activate that alpha protocol and run out there with around a 35 to 45 delta across the board in the call options. Right. And if you haven't gone through the work on that, or you haven't seen the presentation on that and you don't understand what I'm saying, that's all right. Just pick a sector, right? Finance, energy, technology. It's got to be one of those three. If this happens to be one of those rip your face off rally trend days, and the S&P and the Nasdaq start to correlate with 80 to 85% of all of their markets moving to the upside, you don't have to worry about being a stock picker and going in and individually trying to anticipate which name is going to make the move, right? Pick things on the list with the highest beta, grab an option with a 35 to 45 delta in 8 to 10 products and run it to the end of the day. Right? It's basically throwing a dart at a barn. Pretty hard not to hit the barn. All right, sectors that are up in the pre-market include Bitcoin, not necessarily a sector. Notice that we're fading back down and very likely going to try to close that gap. Industrials this morning are up in the pre-market. Communications and airlines. Now, for me, the line in the sand is at least a half of a percent. If it's not up at least a half of a percent, then I don't really consider it to be, quote, up in the pre-market. Right. The same thing on the other side. What's down this morning? Marijuana is down close to 1%. Energy also down. This will be a really nice reversal play this morning if this starts to flip back over. And I really think I'm going to be spending most of my efforts focused on energy, at least through the first part of the morning. But what this list really doesn't have in it, because these are more of the old school S&P 500 sectors. But what that is lacking is more modern things that we would want to look at. Say the electric vehicle sector, right? The EV market. Well, there really isn't an ETF that we can focus on and point to and kind of say, well, this is a representation of that market, right? We need to be able to build our own list. So looking at crypto names this morning. Now remember, these crypto names are not names of coins. They're names that are heavily invested in coins or names that are a part of the blockchain. Looking really good this morning in that sector. The EV market, looking kind of nasty out there. Well, I'm seeing some numbers turning around here, but it's slow going. Keep your eye on some of those legacy names like Ford, General Motors, um, things like Ride could offer you some opportunity in the near term just because of their cheapness, right? Start throwing options in there, kind of just hedging when the risk is that little. You know, nah, why not? And that MJ ETF that we use for the marijuana stocks doesn't really do a good job. We got to be able to break it down more than that, right? Whether it's medicinal, recreational, if it's just CBD, if it's the marijuana real estate. So that's why we build this list of the marijuana companies so that we can see them and be able to check them this way instead of just using that MJ ETF. And it kind of looks like a mixed bag in there this morning. So energy reversal is going to be the number one thing on my list this morning. Keep your eye on finance. I think they're going to offer uh, a lot of opportunity in all of this volatility. And then technology. It's going to be those three for the plays, right? And then, of course, watch the clock. That's what I got, guys. Have a good one. Be careful, be safe, and I'll see you all in the bullish bears stream.